What's going on, everybody, and welcome back to the channel. So in today's video, I'm going to be talking about DraftKings stock and why this is the next stock I'm going to be starting a position in once we see a little bit of a pullback, and I'll get into that in the video. But for the purpose of this intro, I'm going to be talking about really what growth I see moving forward and why I really think this is an opportunity for me to at least double my money over the next few years. And I'm not really going to be covering really too much of the financials or the valuation metrics, because I did do a video on that a couple months ago. And if you want to check out that video, I'll put a link up top to that, and you can check it out if you want. And let me know in the comment section if you want me to do an update video, because I'd be more than happy to do that. So make sure to hit that like and subscribe button if you appreciate videos like this, because it really does help out the channel a ton. So with that being said, guys, let's jump right into today's video. So like I said, I'm really going to be talking about the growth here, and it all starts with what DraftKings actually offers their customers. So as we can see from here, DraftKings has been steadily increasing the number of offerings on their platform, all in an effort to broaden out the potential user base that they can target. Now, one thing I'd like to point out on this slide is that they were able to take a negative impact like the global issue, which actually forced sports to shut down for several months, and flip it into new opportunities by creating more ways for users to bet on online games like fantasy Call of Duty, Counter-Strike, Rocket League, and Madden. And any of my fellow gamers out there that are watching this, you'll know this, but if you don't play games, these are some of the biggest competitive online games out there right now. And I think maybe the only games they are missing now is Fortnite and Warzone. But that's something I love to see, is being able to turn something negative into a positive that could really help the business move forward as they continue to grow in a multi-billion-dollar industry, which we'll get into later. Now, looking at their market share, we can see that DraftKings is pretty much side by side with FanDuel, and I think ultimately the dominant player in fantasy sports and sportsbooks will go to whoever can land the most partnerships with major networks and sports teams. And I bring that point up for a reason, because DraftKings has been hard at work the past 2 months creating several new strategic partnerships that I think will play a huge role in driving the future growth for not only this company, but for the sports gambling industry as a whole. Now, the first partnership is by far the biggest and the one that I'm most excited about, and this is with the ESPN network. So just last week, it was announced on the DraftKings investor relations website that they had just completed a multi-year agreement with ESPN to become a co-exclusive sportsbook and exclusive daily fantasy sports provider. Now, under this agreement, DraftKings will now be able to integrate its products and offerings across ESPN's digital platforms. DraftKings will also power existing and future ESPN studio shows with dedicated segments for promotion, beginning with daily fantasy sports. Now, even if you don't watch sports, I think we all know that ESPN is by far the biggest sports network and has 24/7 news covering everything sports related every single day. And for anyone watching this that is a sports fan, then you understand how big of a deal this is, because ESPN has some of the top sports talk shows that everyone like me goes to get their daily news. And if you're an avid sports fan who likes to bet on the games, then you're probably watching ESPN's First Take, listening to Stephen A. Smith and Max Kellerman argue about Kawhi Leonard and LeBron James and who's the GOAT. So if you are a sports fan, you definitely see where I'm coming from. And if you aren't, then just understand that ESPN is probably the biggest network for sports news. And on top of all that, as part of their media integration, links to DraftKings products will be served across the ESPN website and fantasy app. And since basically all of my viewers are males, I think it's safe to assume most, if not all of us, know several people that are in a fantasy league. And this ties back into my point of avid sports fans who also do fantasy sports. So now DraftKings will get even more exposure through this partnership specifically, which will help push them even further as the #1 online sportsbook and daily fantasy sports platform. And this is just one of the many partnerships they've created over the last 2 months. So just to highlight a few of the other ones, we've got a multi-year agreement with the MLB, the New York Giants, the Chicago Cubs, and a recent agreement to have Michael Jordan take an equity interest in exchange for providing guidance and strategic advice to the board of directors on key business initiatives. Now, obviously, this is a great deal for DraftKings, because who other than MJ would you want to have as an advisor that not only knows the game of basketball, but more importantly, knows how to make smart business decisions, especially considering that he's grown his net worth to $1.6 billion through his Jordan brand and majority ownership of the Charlotte Charlotte Hornets. So like I said, this is a great addition to the management team to be able to have an advisor with the resume of Michael Jordan's. So now to end the video, I'm going to quickly cover 3 main reasons why I believe they'll continue to grow as the leader in this industry. So the first reason is because they are entering a total addressable market of more than $40 billion. And when you take the market size multiplied by DraftKings market share and then multiplied again by the projected percent of US population that has legalized betting, you get potential revenue of $3 to $5 billion, which is way more than the roughly $400 million they're bringing in right now. So there is clearly more room for this company to grow. And the next growth factor I'm going to talk about ties right into this one. And this is the fact that sports betting isn't legal in every state yet. So what this means for DraftKings is that there's still a ridiculous market of potential users that are literally untapped right now. And here's also a map of this shown by DraftKings with states that currently have active mobile legislation in the works as well. So that's really what I feel will be the driving growth catalyst for this company over the next, let's say, 5 to 10 years, is really just getting more states legalized and growing that total addressable market when it comes to the number of users. Now, the last reason I think they'll see consistent double-digit growth is because they are well positioned to take advantage of this growing industry with more than $450 million in cash and 0 debt on the balance sheet. Now, this puts them in a great position to expand their online sports betting offerings as more states continue to legalize sports betting without having to raise more capital or dilute shareholders. So like I said, I really do see this company growing at a double-digit pace for at least the next 5 years, and really maybe even longer than that, because it really depends on how fast states can legalize sports betting. Because honestly, as more and more states legalize sports betting, their total addressable market will slowly start to increase. And in turn, this will obviously lead to more revenue and more bottom line net income growth. And on top of that, I really think they're gonna start creating more partnerships, which will lead to more market share. Now, this is all my opinion and solely my opinion, but I definitely wanna hear what you guys think of DraftKings. I know I didn't get into the valuation on this company, and to be honest, it is a little high right now, and that's why I'm really waiting for a pullback before I start a position. And if I had to tell you guys what my personal price point would be for entry, I'm really looking for it in the mid 40s to at least start a position. And that's the important part, because I'm not gonna build my entire position in one buy order. What I'm gonna do is buy maybe 10% or 20% of what I want my position to be. And then if it goes down, I'll obviously add more and keep lowering my cost basis. But like I said, my entry point is really that mid 40s. So if we see it get to that level, I will definitely be a buyer of this company. And like I said, let me know in the comments what you guys think. And if you haven't already, be sure to smash that like button, because it really does help out the YouTube channel. And I just want to say I appreciate all of the support I've been getting. Be sure to subscribe, and I will catch you guys on the next one.